What's good, guys? This is Michael St. Clair with the Vested Society, and I'm with.
Itai with the Vista Society.
And today we're going to talk about markets. Now, if you look at the ES right now, we did have a nice rally from the lows last week, and we did test that 7,600 resistance. And right now we're pulling back a bit. Right now, I am a bit short on the ES, and my target would be in the mid 400s. I do think that we're going to see a lot of choppiness until we resolve this sort of market action. I would say the bottom line right now is that the markets may not crash outright, but I think there's a few different takeaways that we should apply. One is I don't think it's good to chase unprofitable companies when they finally IPO, whether it's OpenAI, Anthropic, SpaceX. Whatever price they launch at, I would argue that it's already priced in to perfection, and it only creates a generation of bag holders if you are chasing price. As well as I would say it's good to focus on finding undervalued companies and ideas rather than piling into the crowded trade. And that leaves us with a potentially balancing market into the next this inflation data that's coming up this week. So I would say going into the week, I will lean on 7,600 as a weekly resistance for my target being 74.60. And I do think that 74.60 remains a very interesting support level on a weekly time frame. So I wouldn't necessarily be too bearish on the broad market here, but I do want to see if you are bearish, you would want to see a weekly close below 460. Otherwise, I do think that we could balance here and eventually move back up higher into the 7700s. So to summarize with the ES, I do think that dips will likely be bought with range-like conditions for the next few days. And if we want to see a clear trend, we need to see either 7,600 or 74.60 to be broken. So yeah, let's just see what the inflation data gives us, and we could make our decision then. We do also see some jobs numbers that came out recently, and I will say the jobs growth has slowed considerably in June. The US economy did add a few jobs, but it was only 5,700 non-farm payrolls, and that drastically falls short of 113,000 consensus estimate. And this, I would say, is much softer growth that was compounded by a downward revision of 7,400 jobs across the previous 2 months. So I do think that this metric, the only metric that was behaving in this jobs report was wage growth, which held steady at 0.3% month over month and 3.5% year over year. Now, although the official unemployment rate has improved just slightly, ticking down from about 4.3% to 4.2%, I would say the reason behind this drop is a bit of a major red flag. And I would say that this decline in the number was driven entirely by a max exodus from the workforce rather than new hiring. Going into the details, if we look at the numbers, more than 700,000 people left the workforce in June. The number of employed individuals actually fell by 500,000, while the ranks of the unemployed shrank by 213,000. And I would say this dynamic dragged the overall labor market participation rate down from 61.8% to 61.5%. And I would say the most alarming from my perspective is this disengagement that was heavily concentrated among prime age workers, being workers from 25 to 54 years old. And the participation rate experienced a steep drop from 83.9% to 83.3%. And this is quite a big drop, especially at a time when the economy has been holding up rather well. So if you believe the official data, that's up to you. Um, I mean, it seems like our younger generation is not only getting disenfranchised from capitalism, but they are actually totally disengaging from the economic engine as a whole. And I would say that is a pretty big red flag for any national economy. Now, going into the sectors really quick, I would say the only two sectors that show growth at the current moment is private education and healthcare services, which continue to single-handedly prop up the labor market and added 69,000 jobs in June. This sector has shown a staggering level of dominance, accounting for about 70% of all US job creations since December 2022. And in a major surprise, this historically reliable leisure and hospitality sector shed uh, about 61,000 jobs in June. And this is quite a sharp reversal, which followed a gain of 44,000 in May. So given the influx of uh, because we do have a World Cup going on, given the influx of these World Cup patrons who go to bars and venues for the World Cup, the sudden contraction suggests that business owners likely overhired in May, anticipating a much larger economic boost from the tournaments than was actually materialized. And surprisingly, this has not yet materialized in a negative factor for the airlines and hospitality stocks yet. So, my key takeaway from any talk of rate hikes anytime soon is not grounded in reality. In fact, if anything, I will expect the Fed to take a extended pause on rate hikes as well into the end of the year, if not longer. So I would say the week ahead is fairly quite risky in terms of macro this week, and we won't see any we won't see any major economic data prints until well, actually the 14th. So not this week, but on the 14th in about 2 weeks is where the major inflation data is released. So I do think that several forces are at play here, meaning, for example, the rapid fall in oil prices globally. We will see a confirmation on the Fed not raising interest rates anytime soon following that, I believe it's a Tuesday. And let's see. Also, going to last week, we did see the biggest outflows with investors dumping shares in a lot of these high-flying AI stocks, such as Micron, Tesla, and SanDisk. And as of late, the intraday volatility on S&P and Nasdaq has been picking up steam. And I would say that these moves normally comes up in at times of extreme uncertainty and not bull markets. So it's hard to say, but it does have some people questioning whether or not this bull market is coming to an end. And you do have this impulse that acts as a motivation to take profits on some of these high-flying stocks, like Micron and all these AI stocks who are up at least 500 to 1,000% in some instances. So I wouldn't be too bearish here, but if you want to be more on a bearish camp, you would need to see a broader market sell-off. Even if Micron does sell here for like a 30% down, and Nvidia were to slip lower, there's a lot of relatively cheaper stocks to pick up the slack and keep the general market afloat, which will prevent an outright collapse heading into the midterms. Now, going to such an environment, I would say that unless we take a significant haircut in these major leaders, I would not chase these high-flying stocks. Micron, for example, is a quite overbought stock, so I would probably wait for a better price if you were to play the momentum. But at the same time, you can look at longer time frame supports on these stocks because they do create a lot of great setups for swing trades in both an up and down markets.
Good boy.
With AI stocks in particular, I think there's a reasonable doubt that has been introduced in the mix, which makes me question the long-term profitability of these companies. And it's not that the technology is not revolutionary. It's rather that these current valuations require companies to achieve margins that defy any historical precedent. And the US stock market is measured by valuation metrics, and comparing it to past history, it is the most expensive in all of history, even more expensive than the dot-com peak and 1929, which was the sort of the Great Depression. So I will say we are moving past this wow phase of the impressive large LLM powered chatbots. And now we're crashing into the headfirst into this reality of larger scale enterprise integration. So there's a difference between building a fascinating language model, but then you also securely and effectively integrating into a company's workflow to save money or drive revenue is another beast. And I think many companies are realizing that deployment costs are astronomical. So I do think that several AI companies may have been deceitful or dishonest, and they might be there might be some shady things at play as well. But again, this is trying to predict the future, so we can't really say that this is for certain as a disclaimer. But I do think that AI will not necessarily replace human labor fully just because there is a lot of risk with AI at the current moment. Besides that, right now, we're doing the challenge account. And based off the challenge account, we're long currently Microsoft, I believe in the 370s, and
Yeah, that's true. 370.
SoundHound, which
Now,
is up quite nicely
couple
today.
other stocks we're looking at now is going to be CoreWeave. So I know that's one that popped up on our radar.
Hmm.
Um, why we looked at CoreWeave, I mean, I don't have my screen shared right now, but that's in a good options level. I think I'm gonna wait for the implied validity to go down a little bit on it. You got to be very selective with the stocks that you're also getting, especially in this environment. We, like as Mike mentioned, we are pretty high on ES. You want to shoot for stocks that are a little bit undervalued or looking to mean revert at this time. Personally, our team, we're not looking to chase right now. So as he mentioned, MU stocks that are kind of everybody's hyped up over. We're not looking at those. We're looking at ones that are and gonna fall within our trading parameters. So Microsoft was one of those. We had Mag Sevens have been hit hard pretty recently,
Hmm.
as opposed to the overall market. So we like discounts. Microsoft is a strong stock. I think fundamentally nothing changes with Microsoft. I know people were concerned about their AI spend and oh, is people gonna stop using Office or whatever the case is. But I think it's very well integrated already into many businesses. It's not like Microsoft is going anywhere. So I think it was just a huge overreaction on that part. So I know we are long at the 370s. Currently up what 17 handles on that, Mike. Uh,
Hmm.
sound sound. I mean, this one's interesting just from a technical standpoint. I mean, if you're looking at the open interest on it, it looks pretty good. I mean, there's overwhelmingly more call options than there are puts, and if we look at that just alone, we know that options do sway the markets and more than just shares do as people are buying with leverage. It's also good to see people putting in leverage bets on specific companies. That kind of gives you a thesis to work with. Sound is one of those that we kind of like. We're aiming for the $10 price range, I believe. We would take some off there, hold a runner off for some higher. That is yet to be seen, but we are in at the low $6. We can definitely see a spike. Anything else that you're looking at, Mike? I think from as equity standpoint, there hasn't been too much. Like I said, it's more important to be selective now than just buying whatever and hoping for the best. We're waiting for the trades to come to us.
Hmm.
As of right
I
now,
think SoFi is a very interesting stock.
so far, yeah, but it's a little bit longer term. And as I think we
I've
spoke
been
about it, it'll take a little bit more
yeah,
time for this
I've
one
been
to get.
building a long-term position on it. I've been adding in the mid to high teens, and I think my longer term target would be in the 40s and 50s.
I
Um,
am not a big fan of crypto overall, but I do think there is going to be some buying opportunities here, especially with Bitminer. Again, I am not pro crypto, but I think just based on the large sell-off we've had over the last, I mean, really months, I think we're due for a rebound, to be honest. I mean, I think we can definitely see Ethereum 3000 at least,
hmm.
again. Um, I know the regulators are looking to get what the Crypto Act legislation passed, or I don't really know too much about it, but I'm just from a technical standpoint, I mean, this is a great buy zone in my opinion.
Wait,
At
so
least start accumulating.
you don't think Bitcoin could be the next digital gold or like Ascoin or like um,
Um,
or Bitcoin or whatever
I
it's
mean,
called? Or,
honestly, Mike, to be honest, I couldn't answer that question. Like, I'm not a news-based trader. Like, I'm just looking at the momentum and
hmm.
of course, we pride ourselves heavily on options flow. I know Ethereum, it's harder to track the options flow on it, but I know silver was a good one for us too. We're looking at getting back into silver. Um,
Yeah, I've been buying in the high 50s.
yeah, I think silver is due for a bounce. I mean, if I'm looking at the internals of, options flow on it, it looks pretty good. I mean, o overall open interest is pretty positive.
Hmm.
So that prices should magnetize to those higher strikes. Again, it's not 100% guaranteed that they will, but based on the environment and we're in, and from a technical standpoint, I think that silver can definitely bounce. If we're going for a bounce, I mean, what's real? I think
I think it'll
65.
be easier if you share screen.
All right, cool. So yeah, option. I mean, this is one I was looking at too, to be honest. It's pretty
Hmm.
beat up. First of all, this is a good sign. This is what I like to be. This is one of the first things I looked at, first of all. I want to see when options are cheap. If they're not cheap, I don't care. Right now, pretty cheap. I would say relatively cheap compared to a 1 year span. We're definitely on the lower end. So that's good. That's gonna be something I like to look at.
Hmm.
See gamma. So I want to see gamma levels. So right now we are in a
Amplify.
amplifying regime. So I want to kind of see this turn into dampening. So why I would stay away from amplifying, because if we start losing these levels here, like we can definitely see the price kind of go down faster.
Hmm.
That would be a better entry if they comes down more. Right now we see positive gamma decay over the next few. I mean, I know for the 11 days out and 18 it's negative, so I would watch out for that. That means that we have less hold on levels. So for example, we're in a major levels right now. When we have negative, you have to be very careful. Like when you start seeing positive, that's good. That means that there's some options activity here, especially from the when we see when we see a dampening environment, you're going to see the ranges are a lot smaller, and that most likely means that it's a grind up type of environment. So we would see stock movement be amplified by buys, or if we get into zones, we'll see mechanical buying from market makers in these specific areas because they have to balance out the gamma. They need to match the gamma with. They're pretty much dealers like a sports book, really. So the market makers are gonna be buying in this area. Right now, we're not there yet. We're amplifying, so
Hmm.
kind of just gonna just watch for now and see what it does. Um, Same thing with CoreWeave. The CoreWeave, I was looking at that one. Reason I was watching CoreWeave, I mean, if we look at these two, these are two calls that I saw come in recently. I've added them to my watch list. Doesn't mean I bought it yet, but interesting. Keep in mind the dates. So 101 days out for a thesis. Um, these was put in, when was this bought? I think this was bought recently. Yep, there you go, 6:30. So this was what? Seven 7 days ago. So
Yeah.
that to me is showing some activity there. What is this one here? When was this one? There you go, 6:30. I think I
Mm,
clicked that one already. There you go. Okay, see, there you go. Set on the second. That was 4 days ago. Somebody bought $2 million worth of premium right there. And we can see the open interest has remained intact. So that tells me the thesis is still open. If we see
mhm,
open interest collapsing on these contracts, I would probably thesis would be weaker. But I mean, it's only been 2 days. So we'll see if we see some validity. If this stays open, that's going to be a very good sign. It's not the only sign that we look at, but if we look at CoreWeave itself, net premium is quite high. That's good. We got positive net premium.
mm.
Gamma exposure. We're still in an amplifying regime. So this is the reason why, and this is another reason why I have stayed out.
Okay.
So far, we have very negative gamma decay. So once I start seeing this turn positive and this flip to dampening, I would be more confident in these levels here. So we see we got this major red bar there. Let's see where we have the spot gamma. Let's see. This is pretty much a measure of the open interest at specific levels. So if we go, I always like to do it at the weekly time frame or the daily. I don't like to do anything lower. So right now, I see. So this is what it's telling us. There's clusters of open calls at these levels. Wherever the biggest ticks are the biggest open interest levels. So as we can see, we got 120 is a very concentrated level for calls. We're at a gamma flip regime right now. So I would we want to be buying. This is why, Mike, I was mentioning to you like the low 70s, because this is where the majority of the put concentration is. And if you're a market maker, you're not going to let this price go down and get all these people in the money,
Yeah.
right? So that you're gonna see more likely mean reverting action once we get to these levels, back and snap back up to these kind of levels right here. So you see we have pretty, look at that, 150 strike has a lot of calls open on it.
Hmm.
Look at that. That's yeah, that's heavily concentrated. Um, so yeah, I mean you want to be playing like the mean reversion plays. So I would be, mid 70s for me would be a good buy.
Yeah.
I don't. I mean, you also got to keep in mind too, based on your talk on ES, we are quite extended, so you don't want to be too early because if the market starts pulling back, we can definitely see stocks like this. I mean, look at this. The movement in one day is like 6%. I mean, this could easily drop another 10%, if the market follows. So we want to just be able to tread on caution right here. I don't want to just jump in because okay, it went $4 today. Like I'm not gonna just buy right now. I'm just gonna wait until the conditions meet what I need it to.
Hmm.
OI changes. Yeah, so you look at the open interest. I mean, this is just an easier way to see it, really. Very concentrated strikes. Look at that. Very majority of
Wow.
call volume there. This is why I liked CoreWeave to begin with. Again, we're just waiting for the kind of the regime to change in our favor.
Yeah.
And also we do see that I know the implied, this isn't really crazy implied validity to be honest, but I
Hmm.
would be more inclined to buy it in the 20s. Because I don't want to be eating the theta as well. So if it goes against me, I want at least the gamma to go toward my direction. Let's say even if the stock doesn't move that much, but implied validity goes up, at least I'm taking a little bit less risk because the contract price will go up even if the stock doesn't move. So I want this to be all in my favor. I've had times when I was first learning where you buy a stock and it goes up to 20 30 handles, but you buy it at elevated implied validity and you wonder why the contract doesn't gain any value and then you're like what the heck, what am I doing wrong? Well, what you're doing wrong is the timing. You're buying
Hmm.
at a premium, which is not good. So a small
Yep.
thing to keep track of, but it does make a very big difference. So I think CoreWeave is going to be one that's on my watch list. As of right now, we will continue to monitor these two contracts. We will continue to see if there's any new CoreWeave contracts. And then another thing just to look for is just the general. So we see mostly everything is pretty bullish. And then we want to see what the highest open interest contracts are, and a majority of those are calls. And you don't want to see anything like see this. I would disregard this. I don't really care about 10 days away, right? But anything between minimum 45 days away to me is good for a swing setup. Like 45 days, we got see these puts. These puts are irrelevant. Like see, this is an irrelevant put. Like
Mm.
10 days away, that's really not, that's so out of the money that's really not going to provide any. These are, look at that, the first one, two, three, four. See, this one's irrelevant, I don't care, but the first four, this one's also irrelevant. But these ones, these big ones, somebody here is positioning for a big move. Let's see. $4 million in premium there. Yeah, this let's see how much open. Yeah, see, ton of open interest. Look at that. When was this opened? Okay, so it's been slowly being accumulated since January, and people have not been closing the position on this specific one. 30, we're up to 31,000 open interest. And you see, even all the ones that they're closing, these are very small amounts. Like if I saw minus 16,000, I would be very concerned. I'd be like, okay. But very small cells, nothing crazy. And we still see an uptick in the open interest. So something to definitely keep an eye on. I mean, look at that 150 call. That's very doable. 2 years away. That's yeah, so overwhelmingly, we can see that there is bullish sentiment around CoreWeave. I just, you got to time it and play it right based on what the options is telling you. So what it's telling me is a little bit longer dated calls would be good. Like 3, 4 months out for me would be a sweet spot. Um, I would just wait for the implied validity to go down. But yeah, other than that, pretty solid candidate. I think we're just gonna wait for it to come to our levels, and I think it should be a good buy.
Sounds good. Well, thank you, Itai, for the options talk. I think this is a very valuable session for our subscribers. And yeah, I mean, is there anything else you want to cover before we end
Oh,
this
there's
recap?
not too many equities I saw that I like, but I mean this is one of them. Oracle, I did mention too. I did like Oracle, but again, we are waiting for the regimes to change. We want to buy in a dampening regime. So what are we at now? I believe amplifying. Yeah, we gotta wait, but at least see this. This is stronger though on Oracle. Like this is what I want to see at least. Then I
Hmm.
want to see this start flicking over to dampening. We can start buying. I think it's just been beat up too. I mean, like this is ridiculous. Like we look at that. Bro, we were at $250 like a few weeks ago.
Wow.
It's just been getting beat up. Like that this could definitely mean revert. Like,
Yeah.
let's see what's going on here.
Seems like it's at a critical level.
Yeah, silver looks like it's ready for a bounce. I like it. Can you see my screen right now?
Yeah,
Oracle, there you go. I mean, this is another great sign. I mean, by the 200 week moving average, this is a great place to be looking for longs. Like,
hmm,
especially long term. I know me and Mike, we're not into that day trading unless you're futures, but I mean, if you're swing set, this is a great swing setup to be honest. Or look at that, bro. Like 250, bro. Like what is that? 2, 3, 4, 5 weeks ago, and 1 month ago, we were trading at 250. That is just no bounce.
yeah,
Just right, just took a shot off a cliff, bro. Look at that. I mean, if I'm looking for anything mean reverting, I think 180 is a solid bounce back zone. I mean, this can get easily bounce 40 handles, like no problem.
definitely.
Somewhere in this area would be great to just take your position off or take some partial.
So,
Well, I mean, that's all the analysis I had, bro. I don't have any
okay,
two stocks I'm looking at, Oracle, CoreWeave, and then if you have
yeah,
anything to add.
cool. Anyways, guys, thanks for watching. This is Michael St. Clair with Investor Society, and we'll see you guys in the next one.